Day 10 of a government shutdown. What would you think if somebody said to you, the U.S. government is going to completely shut down? You think there's going to be chaos everywhere, chaos in the streets. The markets are going to be plummeting. What's going to happen? Well, here's what's happening behind the scenes. We have the Dow Jones hitting a record high. We have the S&P, NASDAQ all hitting record highs. We have oil at $60 a barrel, the perfect number for our inflation numbers. We have the 10-year Treasury bond yields coming down as well. What's going on behind the scenes? How's this going to affect mortgage rates? That's what we're going to talk about in today's video, folks. So my name is Dan Frio. I do this report each day and inform you guys what in the heck's going on with mortgage rates and the whys behind it. So today what we're going to talk about is the lack of information, but where are we getting the news that's really affecting the market? So let's get over to what we're seeing right now. Here's the headlines. And with the lack of data that we have, basically the media is grasping at anything to give it the market directions. So what we have right now is we have Fed officials. They're coming out. They came out yesterday. They're coming out today, and they're going to start telling us what their thoughts are. Many of them are coming out saying there's rates cuts coming because we're really not. We know tariffs are going to create inflation, but they're not going to be. It's not going to be a huge spike like a lot of analysts expected. Then we go over to the jobs market, and we don't have any data there. But the last number we have from ADP is dismal. So let's go over and see why this is helping the market. So when you go to the economic news, here's what we're getting. So we really have no direction on what's taking place. So what I did is I went over here. Let's just try to figure this out ourselves. Okay, so you're in the Federal Reserve's seat. Here's the numbers that you have. You have the federal funds rate right through here. This is the rate that we control, is the Fed, and it's 4% to 4.25%. We usually want to target this at where the inflation is. Okay, so let's think of it that way. So we'll pivot back to this in a second. We have inflation right now that's 2.7. A lot of people are saying this is 2.9, 3%. Okay, so we're just going to say, let's say on the high end it's 3%. Okay, then you have the unemployment rate at 4.3. Anything under 5 is full employment. This is the area where the Federal Reserve is getting really shaky right now. We don't have this data. And the last pivot point we had on this was the ADP report, and they came out with 30,000 less employees than we thought. They revised their last reading from a positive 50 to a negative 3. So the outlook on the jobs market looks pretty darn bad. So then you go over to the inflation front. And, well, here's the inflation numbers I want to show you. Here's a new indices we're going to start watching is the CPG. What this gives us is basically food inflation. Okay, so here, this is probably a good model for me to explain to you guys how inflation works. And before you turn, it might be a little bit, it's easy, but it might be a little bit complex to understand. Here, let me go to this chart for 1 second. So here's where our food inflation's been for years. 2019, 2020, 2021, then all of a sudden, poof, this happened. So if you look at this, if you look at the inflation rate from here to here, you might say, Dan, that's really nothing because the market didn't move or the numbers didn't move. Correct. But let's get over to here. Here's where the numbers here's where it gets a little bit confusing. Let me pull this up a little bit if I can. So if you took the number from here to here, let's say that jump is 10%. Okay, then you went from here to here. We're going to look down here at these lines down through here. Is another 10%. And then you go from here to here, and it's 0. Well, you have the inflation from 0 to 10. Okay, that's a 10% increase in inflation. Then you got another 10%. That's going to show you a 10% inflation, but it's actually went up 20% because we didn't give back this in the past. Then when you got up through here and now it's saying it's 0, it still means we paid 20% more and we're flat now. So it depends on how long these lagging numbers down through here, when do they fall off? Because when they fall off, the inflation numbers could look a little bit better. So if you look through here, you're way down the chart, but these numbers all the way at the end were a big dip. That could skew these numbers. So I think that's what's happening a lot of times right now is we have inflation. Yes, we have inflation. The tariffs weren't as much as they were expected to be. I expected they would add between 0.3 and 0.4 to our PCE. Now, the PCE is the number that the Federal Reserve watches. So let's get over to that. So if you go to this back where at the beginning of the year, let's go here. In March, April, May. So we're going to go back to February. January and February, we're at 2.6. That's when the tariffs were kind of launched. I said we're going to get an uptick of between 0.3 and 0.4 from there. So it could push us up to 3. That's what my expectations were. We're going to go at least 3 to 4 basis points because of the tariffs. But we're almost there, and we know more tariffs are coming in. So I don't think the PCE is going to exceed 3. So now let's get back to the federal funds rate. The Federal Reserve now at this point, if you're sitting on the Federal Reserve, what would you do? If the PCE on the high side when it comes in is 3 and you have the federal funds rate at 4 to 4.25, wouldn't you cut 100 basis points? Well, that's what the markets are looking at right now, and everybody's saying that that's going to happen. If you go over to the Fed Watch tool in 19 days, the Federal Reserve is expected to do what? Let's go to probability. 95% chance they're going to cut at this meeting in just 2 weeks. And then in December, they're going to cut again. So that's 2 rate cuts coming, and that's what the markets are looking for. Once the data gets in, here's what my expectations are. So I'll give you my forecast. The shutdown's going to last maybe a week or 2 more. And then finally things are going to get pretty rough, and each party's going to say, well, we're going to give in because we don't want the troops and Social Security and all this other stuff to do. So that's going to get resolved. Okay, people will be the furloughed, they'll get all their back pays and everything else. Then we're going to start getting in the numbers. The inflation numbers aren't going to be as hot as a lot of people thought. Okay, then the employment numbers are going to start trickling in. They're not going to be as great as they once were, because also we're eliminating, there's a mass immigration thing going on. That's going to hurt those numbers as well. So that's going to continue to have the Federal Reserve's votes of positive rate cuts. So that's what's basically moving the markets right now, that and AI. Other than that, so if you're an investor out there, please be cautious right now. I've lived through a couple of these bubbles, and this one looks and smells and walks like a bubble, and it might be a bubble, but I'm not saying get out of the market. I'm just saying there's pockets that are going to lose and there's pockets that are going to win. So just be careful, especially in the AI section. If you're trying to figure out what's going on with mortgage rates, folks, good luck with that. So I'll give you some of the direction that I have. So here's what we're seeing. And here's why I said that. A lot of people are waiting on the fence for that rate just to come down, a quarter more. I don't know if it's going to happen. So if you go over here, here's the bond market for today. It's up 26 ticks. That means, if you're new to my channel, what this means is mortgage rates are going to come down because the price of the bond right through here, the MBS, that's what we follow, is now at 99.43. It's up 26 ticks. That means if the bond price goes up, rates, and in this case it's the mortgage rates are going to go down. So that's what's going to happen. But if you go to a 2-day chart, we're basically back to where we were yesterday. Look at that massive jump. Okay, you go to a 5-day chart, where are we? Basically back where we were 5 days ago. You go to a 1-month chart, where are we? Back where let's go to a 1-year chart. Where are we? Just a little bit higher than where we were back then. So we're basically a little lower than we were a year ago. So there's no catalyst to really make the markets really scream and go much higher for this, bringing mortgage rates down. So if you're out there trying to figure out what's going on with this, let me give you some advice. If you're a buyer of a home, let's go over to my website real quick. I'm actually a mortgage advisor. I'd love to be able to work with you if you're out there trying to navigate buying or refinancing. Here's what I would do. If I'm looking to build, I think you're going to be okay. We're not going to spike back up to 7% or anything. We're going to be in the mid to low 6s for a while. We might teeter at 5% here and there. So I think you're going to be okay there. If you're looking to buy, same thing. But make sure you qualify yourself at maybe like 6.75. Just to make sure. Now, if you're looking to refinance, we got a tool for you because it's crazy. You have to pick basically the day or the week when to lock in, or you're going to miss it, because you can see through that chart that I just showed you, it's all over the place. One day it's way up, one day it's way down. It's like the stock market. So pick the timing to get in. It's not like stocks where you can gradually get in. With this, you actually have to pick your spot. So we can help you with that. Actually, I created RateWatch 2.0, and we're going to add the 2.0 in here. What this is going to do is give you the ability to let me know what rate you want to refinance. So let's say you're out there and you're like, Dan, I'd love to refinance. I keep missing it, but it costs too much. So we have a whole bunch of reasons why people don't refinance. I'll put that video up through here. It was a live event on Wednesday. You might be surprised. But if you want to check out and see, okay, or put the burden on me to say, Dan, when this rate hits this, reach out to me. Let me know what the numbers would be. Let's go over the payments. Let's go over the savings, especially what's the cost to get this done? Because when I bought the house, it was crazy. Well, the cost of that is a fraction of when you bought it. So if you want to find out more about how this works, go to the RateWatch tool, put in your information right through here. What you're providing me is what rate you're at now and what rate you want me to reach out to you if it hits there, so we can go over the new payments, your savings, and your break-even point. So don't be surprised one day you get a text, a call, an email from me saying, congratulations, your RateWatch just triggered, It's time to look at the numbers, and if you like it, we'll lock you in and get you moving. Same thing if you're out there looking to buy a house. We'd love to help you, folks. So I'm licensed in all 50 states as well as Puerto Rico. We have a slogan here: one application, one credit pool. We're going to compare your loan to over 30 different lenders. How do we do it? We'll check out Wednesday's live events to find out that. It'd be pretty interesting. So if you've already got some rate quotes out there and you want us to compare it with over 30 different lenders, you can put that right in here with the loan estimate review, and we'll get right back to you within hours to let you know if we can save you money on the fees, the rates, or all the above. So for today, folks, my suggestions are: hold off. Mortgage rates are going to get a little bit easier today. But if you're looking to refinance, put your information in RateWatch so we can help you track those rates for today. But I will be back today at the live at 2 o'clock, where I'm going to answer all the questions that you guys have, and we're going to do a recap of the week and then what my thoughts are for next week. So stay tuned for our live event later this afternoon, folks, but have a great morning, and I'll see you then. Take care. Bye-bye.